It's tax season and the clock is ticking down to April 15th. Today on Your Money, the tax scams to watch out for, why your return may be smaller this year, and expert advice on how to maximize your refund. It's all coming up next. Welcome to Your Money. I'm your host, Gordon Severson. Like the old saying goes, there are two certainties in life, death and taxes. April 15th is only a few weeks away, so today I'm sharing tips for filing, scams to watch out for, and at the end of the show, I'll share some unusual tax deductions. Did you know that some plastic surgery could give your refund a lift as well? That's just one of the unusual tax deductions that we'll get into later in the show. But first off, let's start with the basics. Once you're ready to file your taxes, gather your documents. This is information from your employer, probably a W-2 form, or if you're self-employed, a 1099 NEC. You'll also need any 1099s you have from other income, like interest payments, dividends, royalties, and Social Security payments. And of course, make sure to have your Social Security number and your bank account information readily available. Next, decide how you're going to prepare your taxes. Your three main options are using a tax prep website or software, hiring a tax professional, or filing yourself by hand, the old-fashioned way. Remember, if your gross income is $79,000 or less, you can file your federal taxes for free. Then figure out what credits and deductions you can take. The most common deductions include interest paid on a mortgage, charitable donations, medical expenses, and property taxes. Then put it together to see if you owe money or if you're due a refund. Finally, file it. Most folks file electronically, and it's the quickest way to get your refund. If you choose to have someone else file your taxes for you, it can be tough to find the right person. Scammers are out there and they could take advantage of you at tax time. Luckily, the IRS spends a lot of time and energy investigating tax crimes. And this tax season, agents are looking out for you. Special Agent Kareem Carter gave our station in Washington, D.C. this advice.
Ask questions. Go with your gut. If something's telling you it doesn't feel right, go with your gut and find somebody else. Do your due diligence, do some research, and find a legitimate tax return preparer.
Make sure your tax preparer enters a preparer tax identification number on your tax return. Never, and I mean never, sign a blank tax form. And make sure your refund goes to your account, not your tax preparer. Folks who have already filed their taxes have noticed federal refunds are smaller this year. But why is that? Some people are seeing a substantial difference from last year to the tune of thousands of dollars. This story from Texas has more details.
You may be disappointed in your tax refund, but a tax preparation specialist in the IRS gives clues as to why the dollars aren't high this year. The 2024 tax season is upsetting and frustrating to a lot of people. The refund amounts are coming in lower than expected, leaving taxpayers blindsided. Weddings, home improvements, wiping credit card debt clean, plans for refunds were spoiled.
Some people are getting less money back, but it's not because there's less credits. It's because a reduced withholding on their income tax forms.
Tax expert Adrian Carmona says you should be aware of how your withholdings are affecting your refund. Of over 2.5 million people who have filed their taxes so far, there is a 29% decrease in refund amounts between this year and last year. The IRS says the decrease boils down to tax credits returning to normal after they were inflated during the pandemic when people needed the money.
Now they've gone back down to pre-COVID levels, these credits.
Tax credits such as the child tax credit and the earned income tax credit were raised in 2020 to help Americans through the COVID-19 pandemic. That could be the reason your federal tax returns are decreasing this year. If you want to see an increase in your tax returns for next year, changing your withholding is a simple fix.
In order to increase their refund in a way would be to review their form W-4 with the employer. The W-4 form is the form that tells their employer how much or which way to withhold, how much taxes to withhold from their paycheck.
The W-4 form mentioned in the story is your employee withholding certificate, where you can adjust your withholding rate, thereby adjusting your tax refund. The IRS offers a withholding calculator on their website, irs.gov, or you can talk with your company's HR department.
There are a lot of ads online right now claiming to offer you tax relief at a price. A local tax expert I talked with says these ads might be legit, others might be predatory, so think twice before you get your hopes up.
Unfortunately, I think those advertisements, when you hear them, they may give you a false sense of possibility.
Too good to be true. How many times have you heard that? When it comes to ads promising tax relief, experts remind tax filers to keep that mantra in mind and be on the lookout for false advertising.
They have people that are happy that, hey, I did it, and it can happen. But they don't tell you that maybe that person doesn't have any assets. That person doesn't have any retirement account.
Ads like this popping up online claiming tax relief, such as this one called the Fresh Start Program. We have not confirmed the validity of these claims, but one tax expert from Elk Grove tells me he has had clients trying to take advantage of these claims with no success.
And they pretty much string them along to a point where they just give up.
He says if a company asks for money up front, that's a red flag.
I just know that there was an onboarding process, they paid them some money, they were in the process, and they strung them along.
And then clients turn to the help of a certified professional to clean up the mess.
My experiences with those two clients, I just felt that there was just no chance that they would have had the ability to, walk away from any tax liability.
But help is possible. There's an official government program that does help with tax relief called the Offer and Compromise Program. You don't have to pay any money up front.
It's all forms. It's just like a tax return.
Bottom line, there's barely any escaping paying your taxes.
If you are making good money, and by good money is just above the poverty level, you have assets, 401ks, cash accounts, cars, you're not going to get your tax debt relief.
So there are legitimate government programs out there offering relief if you need help paying your taxes, but very few people actually qualify for federal help. You need to have an income lower than the poverty line. You can also reach out to the IRS to make what's called an offer in compromise. If you're approved for this program, you would be able to pay less than the full amount of money you owe. There are plenty of websites offering cheap tax preparation, but are any of them actually legit? This Verify from Florida has the details about a website where seniors can file for free.
Sherry and P in Clearwater, she asked if there are legit sites for seniors like herself to file taxes. After all, April is going to be here before we know it. And Sherry, we can verify you have a few different options. The AARP Foundation Tax Aid Program offers support online or in person, and you do not have to be an AARP member to use it. Now, the IRS also has its free file for any taxpayer with an adjusted gross income of $79,000 or less. If you make more than that and you have a simple return, Floridians are also eligible to use the new IRS's Direct File pilot program.
Again, look for the Tax Counseling for the Elderly program, or TCE, and the Volunteer Income Tax Assistance, or VITA program. Both are run by IRS partners and staffed by volunteers. TCE is available to those 60 and older. It specializes in questions about pensions and retirement. VITA is for people who need help filing and make less than $64,000 a year, have disabilities, and are more comfortable speaking a language other than English. It seems like lately the IRS and taxes have been in the news with all of the changes that have been discussed going on in Congress. So we've asked one of our experts, Scott Katerlick, CPA in our area, to help us kind of navigate through some of these changes. One of the changes that you and I have talked about recently is the expansion of some credits, some energy credits for people. We hear a lot about EVs, but now there's some other ways for other upgrades that you can make in your house that you can get money back.
Yeah, they actually made some changes in the Inflation Reduction Act that was passed into law last year. And not only did they expand the credits for the electric vehicles and the additional pieces that you need in order to make your electric vehicle work, but they also expanded the home energy credits that are available. So things like putting in new efficient windows, a new furnace that meets the efficiency standards, water heaters, insulation, doors, things that actually will improve the efficiency of the energy usage in your home are now a bigger credit than what had been in the past. In the past, you were allowed a $500 lifetime credit for the acquisition of items that made your home more efficient. The $500, well, that was fine, but it was a one-time credit and it got used up and you never got additional credits. Currently, the law now allows you to take up to $1,200 of credit each year. So this year I put in new efficient windows. I will be able to claim up to about a $600 credit against my taxes. And remember, credits are a dollar for reduction in your tax bill. So a $600 credit is substantial and means something. Same thing with if I got to put in a new furnace or a water heater, both of those gives me additional credits that I can reduce my taxes significantly, but not just this year. Next year, they're going to be available again, and the year after that. Now, there's an annual limit of $1,200, so there is some annual limits, but I can basically take this year and put in a new water heater. Next year, if I need a furnace, I'm not going to worry about not getting a credit. I'll get some credit next year. The year after that, I can put in some insulation or new windows that I need, keeping that credit moving forward and getting up to $1,200 a year in credits.
And so if you have made some of these upgrades, find those receipts if you can, if you still have them, and you still have time to submit them this year.
Well, those are usually big enough numbers where you're going to hang on to those receipts and you'll know where to find that information. So.
Yeah, you probably have a warranty or something you want to keep track of. What are some other changes that have kind of come into play this tax season that people should maybe know about that could affect them this year?
Well, just the annual deduction for IRAs and health savings accounts have been increased. So I can now make a $6,500 IRA contribution. And since I'm over age 50, I can actually put in an additional $1,000 of catch-up. So I can make a $7,500 IRA contribution this year, and I have until April 15th to do that. The same thing applies if I have a high deductible health insurance plan through my employer. I can actually deduct the health savings account deduction of money that I put into the plan up to $7,750 plus an additional catch-up because I'm over age 55. So there's a couple of opportunities still available for your 2023 tax return that we can still take advantage of some deductions that we haven't spent yet.
And this year, there's been a lot of talk about the child tax credit and what's going on in Congress. That's been, a lot of headlines and national articles. As of this recording, it still hasn't been figured out in the Senate, so we don't exactly know what's going on. But one thing I did want to get into this, regardless of how that shakes out, how would that affect people filing their tax returns? If there is a change, would they have to make any sort of adjustments to their return, or is all that going to be figured out on the end?
Yeah. First of all, don't stop filing your return because you're waiting for Congress to act. That just doesn't make sense. They will work on their own timeline. The second thing is if you are entitled to a child tax credit and you have already filed your return and they've changed the law allowing you for additional dollars to come back, Congress or the IRS will fix it. They will send you the additional dollars, even though you may have already received your refund this year. So don't hold off filing your tax return. Get your data into the government as quick as you can. Get your refund rolling. And again, if additional dollars are calculated because of the child tax credit, then you will get a refund of those additional dollars. And the government knows your numbers. They'll be able to take care of that pretty easily. There are a couple of other things in that proposed bill that will affect businesses, such as additional depreciation deductions and the research and development credit. But those are returns that are very usually complicated and have tax professionals involved that can definitely solve that problem before they file. So
you and I had this conversation just a little bit ago about the two different viewpoints of when it comes to your return. Do you want to pay a lot more tax throughout the year and then get a big refund at the end of the year? Or do you see that as you're giving the government your money and they get to hold it for a year, and you should try to be paying less in taxes and get a smaller return? What do you think about that? I mean, what do you see with some of your your clients? Is it kind of 50-50 on how they approach that?
Well, everybody loves a refund, but then they're also told, well, you've given the government a tax-free loan or an interest-free loan, and at the end of the day, yes, the government should send us a little thank you note saying, hey, thanks for the money this year. Here's some of your money back, and thanks for the interest-free loan. But I have a lot of people that are really excited about getting that refund, and is it better to pay in a little more than you should throughout the year and get a big refund back, or any kind of a refund back, which you either use it to pay down debt. Oh, we need to buy a new car. We're going to put it back into the economy at some point, and so people are excited about a refund. I'd love to have one every year or two, but it doesn't always happen that way. But yeah, if you've got a refund, people are glad, I think, and are excited about it. Yes, we gave the government an interest-free loan. At the end of the day, you got your dollars back. Don't worry about your neighbor telling you that oh, you gave the government an interest-free loan, you should get those dollars back. But if you want, if you are getting too much back at the end of the year, there are ways of fixing that. You just need to go to your employer and actually change your W-4 form. Your W-4 determines how much withholding allowances are affecting how much you take home each pay period. Go ahead and increase your withholding allowances or decrease your withholding allowance depending on whether I need more or less taken out of my check, and that'll solve that problem for you.
What I think it's interesting about is I had not really considered is it could almost be like this forced saving account where you're forcing yourself to save this money. And I never really thought of it that way, that like if you're paying more in taxes out of your paycheck every 2 weeks, and then at the end of the year you get $2,000, $3,000, $4,000, whatever $1,000 back, that's money that maybe you would have spent throughout the year if you would have been getting an extra $50 or $100 a paycheck. And now it kind of is like out of sight, out of mind, and you're suddenly seeing this big lump sum, and maybe you're more likely to save it and put it in a savings account or a bond or something. So there could be some unique strategy there, depending on your own personality. On the flip side, you get $4,000. Some people are just going to spend it right away and not save it. So I'm sure it depends on your personality.
And there are people who have trouble saving. This gives them that opportunity to set aside some additional dollars. And yeah, if I needed to buy a car or if I want to go on a vacation, whatever I use it for, it does put it back into the economy. But it is something that you saved, even accidentally, is a good thing.
Yeah, one thing I was just thinking of is yes, if you had that money on the front end, you could invest that money and it could grow throughout the year. But then at the same time, would you be spending that much money? Are you spending the growth that you would have had?
You have to be disciplined in order to save those every paycheck. So if you're getting an extra $50 a paycheck, are you going to set it aside? Are you going to put it into the kids' education fund? Are you going to be setting those dollars into a savings account and save them up? Or yes, we don't have our good discipline. The government saved those dollars for us. They send it back to us at the end of the year. Yes, now I can buy the car. I can send additional dollars to my kids' education account. Whatever it is that I want to use those dollars for are there, and so there's nothing wrong with a refund.
So a good challenge for you this year is that think about the kind of personality you have and the way that you save, and whether it would be a good idea to get that big refund at the end of the year or to be saving that money every paycheck. I mean, I'm sure it goes both ways. It all depends on your own personality and your own spending habits.
Yes, absolutely. I think people can use the government as a savings account, but at the end of the day, if you get a large refund, think about whether you need to adjust your withholding allowances or if you're fine getting that refund.
Well, thank you so much, Scott, for coming on the show and chatting with us.
Thanks so much, Gordon.
Everyone is searching for a way to pay less money at tax time, or at least a way to get more money back. Here are some less common deductions you may be able to claim this year.
We We all know charitable donations are tax deductible, but you may be surprised at what else you can write off. Over the years, the IRS has allowed some unusual tax deductions, and that includes cosmetic surgery and weight loss. Previously, the agency allowed a woman to write off expenses related to her breast implants, but accountants warn that's usually not allowed unless you can prove the surgery is medically necessary. Now, if you joined a weight loss program, you may be able to save money if your doctor ordered you to lose weight for obesity. And while we all love our furry friends, we may not like the cost associated with those pets. But if you can prove your pet is for business reasons, you may be able to get a deduction if you own a service animal that counts as a medical expense. Good news for service members as well. Your pet could save you money if you moved your personal items to a new home, since the IRS considers household pets as your personal property. And tutors are also a tax deduction. Tutors count as a medical deduction if your child has a learning disability. And finally, did you quit smoking? If so, you could save money while getting healthier. The cost of programs or prescription patches are deductible, but over-the-counter items are not. While taxpayers like to push limits to save money, accountants recommend you consult with a professional before you pursue any wacky tax deductions.
It's fun to joke about deductions, but in all seriousness, check with a tax professional before you try to claim any of these less traditional items on your taxes. Today's show was a lot of numbers and figures, but taxes don't need to be intimidating. U.S. lawmakers have proposed legislation that could make filing your taxes much easier. So we'll see. Maybe by this time next year, you can sign a simple form and be done in a couple of minutes. We can dream, right? Well, that's all for today's show. I'm Gordon Severson, helping you save, spend, and invest your money wisely. I'll see you next time.